This video is sponsored by the award-winning Daily Market Movements trading platform. To open a live or demo account, simply visit dmmtradingplatform.com. Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 futures chart. Just before I start today's video, anyone who's interested in joining my free analysis group over on Telegram, then please do not hesitate to scan this QR code on your screen. Let's start here with the S&P 500, and yesterday was an extremely volatile trading session, as we all know. It was the Fed minutes, and yesterday we saw the market, the S&P 500, in fact, decline by 2.5%. And during yesterday's video, I said that typically what does tend to occur during these Fed conferences is that you get a seesaw reaction, like a knee jerk, if that makes sense. And unfortunately, yesterday it was actually in the other direction to what I was anticipating. I said during yesterday's video that normally when the statement comes out on the hour, you normally get a decline because it's an interest rate hike. And then as you go into the conference, normally Jerome Powell somehow always manages to help the market find the positive territory. So yesterday it was the complete opposite. We actually had a big change in vocabulary in the statement, where basically the Fed has come out and they said that they are going to be looking to reduce interest rate hikes in the upcoming meetings, and the markets rallied significantly. The S&P 500 was up 1% at one point, even though going into that statement it was down approximately 0.8%. And then after 30 minutes, we had the conference and Jerome Powell come out, and he basically said that him and his other Fed members believe that the Fed rate may have to go higher than where they initially thought it would have to go back in September. And that caused the market to go crashing. We've actually surprisingly broke this uptrend. I didn't think that we would break this uptrend. Over on the NASDAQ, I did tell my signal clients to sell the NASDAQ and to target that trend line, but we've actually broken below it. And, this is quite worrying now for the markets. I think the next level of support is around 3,710. So I wouldn't be surprised to see us traded a little bit lower here. The MACDs are always, the indicators on the MACD is trending lower. If we just quickly look on the daily chart here for the S&P 500, the MACD is still in a bull trend, but we are, fastly approaching that death cross. We've started to come down quite aggressively on that MACD, so I'll definitely be keeping a close eye on that. But at this moment in time here for the S&P 500, I would still say that the trend is still intact. Not this very steep uptrend, but we've continued to create higher lows. But the big question is what happens over the upcoming trading sessions. Do we continue low? I think if we break below 3,700, then I think that would indicate that we could potentially go back down to the lows for a retest. So very interesting times here for the S&P 500. Definitely be cautious here. We're back below the 50-day EMA. This was just a massive head fake that we've seen over the past couple of trading sessions. All my eyes are on this MACD. If we had that MACD line cross below the signal line, then I think all bets are off, and we will be trading back down towards that 3,600 area.